Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your host, the Prince of Investment, Prince Dykes, coming to you guys and girls live all the way from the beautiful state of Denver, Colorado, via Untitled Hawaii, ThinkTech Hawaii. Don't forget to hit that like, subscribe, comment, share button if you got questions about the show. But as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So today's topic, ladies and gentlemen, we're going to be talking about momentum stocks versus fundamental stocks. So momentum strong versus fundamental strong stocks. So many times, the reason why we're going to bring this up, we're going to be talking about what are momentum stocks, the risks that are associated with momentum stocks, the pros, the cons, the finances. We're going to take a break, and after the break, we're going to give examples of exactly what I'm talking about. We're going to go through, I'm going to give two examples, real world examples of a momentum stock and a financial strong stock, and we're going to compare them. So in this episode, so you know what you're going to get in this great episode, we're going to talk about what is a momentum stock, what is a financial stock, what is a momentum strong stock, a financial strong stock, how to look them up, what does it mean to investors, and you're going to get examples so you know exactly what they are and exactly what you're looking at when you're investing. So first of all, ladies and gentlemen, let's talk about what is a momentum strong stock. A momentum strong stock is a stock that has a lot of momentum, meaning that it's a bull, right? Maybe it could be, the momentum can go either way. It can be a bullish momentum, meaning it's going up, or it could be a bearish momentum, meaning it's going down. So a momentum strong stock is a stock that has caught a lot of momentum, maybe due to good news, maybe due to good news, finances, developments and things like that. Usually it's a small cap company or mid cap company that has caught a lot of momentum due to things, maybe the latest news or press that's going on. So now the second thing with the momentum strong stock is we're gonna get some examples in the show. But the thing about a momentum strong stock is the stock is very easy to point out. It's a stock that's just doubling and it's just take off. The media love momentum strong stocks that just take off and go to the moon. You will see them all over the news and the media. Your buddies will call you, your friends will tell you about it. Everybody's like, man, look at this stock. It's just going crazy. It went up 10% today, 20% today. Every day is just big news and it's going up, 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 up. In a way, like it just took this strong momentum. Everybody is buying it. That's a momentum strong stock, a stock that catches a lot of momentum. Now, just going back to the greatest investor of all time, I'm always going to reference Warren Buffett. He says, ride the wave, ride the momentum. Another thing that momentum strong stocks is, it's a trend stock, a strong trend. So to all my day traders and all my technical analysis people, this is a stock that has a strong 20-day moving average. This is a stock that has a 200-day moving average. When you put that 220-day moving average and you seeing this stock is just jumping out of the roof, like everybody can't catch up to it and you don't know why, that's a stock that has a lot of momentum, a lot of money. People who watch the money flow index, a lot of money is flowing into the stock and it has caught a lot of momentum as it's going up. That is a momentum strong stock. Now, momentum can also go downward like a bear in the bear market as the momentum goes down. What do we mean by that? As you can see here, this is the bear. When the bear market is going down, that means that you can catch momentum of just going down. For case point, remember Uber. When it was announced that California was going to say, Uber, you can no longer classify your drivers as independent contractors. You must not classify your drivers as workers. Uber had a strong momentum it had a strong downward trend. It caught a lot of momentum going down, 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 down. So when we say momentum can go up, momentum can go down. So when a stock catches a lot of momentum on the upward side, the media knows it. Money is flowing into the stock. Everybody loves the stock. It's like the perfect thing. News is about the stock, everything, right? So we're going to give examples later on after the break in the show. We're going to give an example of a momentum strong stock. Now let's get into what is a financial strong stock, a stock that is strong financially. What do you mean by that, Prince? What is a financially strong stock? It has come down. This is not an exact study, but I've learned that majority of people that own stocks, don't know anything about the finances of the company. They read press reports. They say, "Hey, this company is building a new truck. This is supposed to be this is supposed to be the competitor to Tesla. This is supposed to be the competitor to Amazon." That's it, right? They don't look at the finances of the company. When you open up the finances of the company, that is the books. For prime example, finances is the way that companies talk. Prince, what do you mean by the finances of the company? Every quarter, companies release financial reports via a report called the 10Q. Sometimes they use an 8K, but most of the time it's a 10Q report. Prince, how do I find the financial reports? You can find them by whatever company you're looking up. For prime example, if it's a publicly traded company, go to McDonald's Investor Relations. If it's Apple, type in Apple Investor Relations in Google. When you go to the Investor Relations, go up on the financials. Since it's a publicly traded company, by law, they must have their finances up and available. They usually have about 3 years worth of finances. Since they want to take money from the public, they have to be an open book to the public. So for prime example, now look at your finances, right? Or you can go to the sec.gov, sec.gov, Security and Exchange Commission. That's Sierra Echo Charlie.gov. You go there. This is the governing body over all publicly traded companies. You hear people get arrested for insider trading and things like that. That's where it comes from, the sec.gov. So every company must turn in their reports to the sec.gov. So you can head over to the sec.gov, look up the finances and all the filings that they have filed with the SEC. So now you can pull up the 10Q report. The 10Q report is a quarterly report that is submitted to the SEC every quarter of the finances of the company. They put in a nice press release. They do a conference call most of the time. But the hardcore finances, they're going to have a balance sheet, a cash flow sheet, a balance statement, a cash flow statement, and they're also going to have an income statement. You can utilize these 3 statements to see how much money is in the bank, how many total assets, how much cash do they have, are they making money? Are they a profitable company? Are they unprofitable? You can even listen to the CEO directly, because every quarter, usually the CEO or the CFO addresses investors and they will tell them what's going on. They actually have a Q&A. So now you can look up the company and say, well, with this company here, I can tell directly exactly what this company is doing. So ladies and gentlemen, what I want to tell you guys and girls, when you're looking at these type of things, you can look at the finances of the company, cash flow statement, income statement, balance statement. How much is the company making money? Is it making a profit or a loss? The quick way you can see that is the PE ratio. Now look at the income statement. How much revenue? What is the top line looking like? The top line is the very top line, which is usually the total revenue that the company is bringing in. Are they bringing in more and more money? Are they bringing in less and less money? Are they bringing in a positive? Or are they bringing in a negative? After that, you can see after they had their total revenue, how much is the gross margin? How much is the net income? The gross is what your pay is, then the net is what you're taking home. How much are they taking home? What is their net income? Is it positive? Is it negative? How much cash do they have on hand? How much cash do they have on hand? Do they have a pile of cash staying around? Prince, why is the cash important? The cash is very important because when hard times hit the market, when uncertain times hit the market, cash becomes king. So what is the cash flow? The cash flow statement is broken down into 3 sections. You got your activity section, and we got your operational, you got your investor, and you have your financing, right? How much money from operations are they making? Their operational activity. How much money is flowing in and out of the cash on this particular day? Also on the cash flow statement, you have the investor activity. Are they investing money? Or they're making money from investments? What do you mean they're making money for investments? Some people sell debt. How do you sell debt? You issue bonds. When you issue a bond, it's nothing but an IOU with interest. Hey, I'm going to pay you back by this time, right? So when you're looking at these things right here, as you can see, you have the operational activity, the investing activity. These are the things that are put right into the cash flow and the cash flow statements, right? So now, ladies and gentlemen, when you're comparing a company, well, how does Apple look compared to Microsoft financially? Who has the most cash on hand? Who has the total market cap? Who's a bigger company? Is it a large cap company? Is it a mid cap company? Is it a small cap company? How can you tell this? Looking at the market capitalization, right? You can look at how can you tell what the market capitalization is? You take the shares outstanding times the stock price. If it's over 10 billion, it's a large cap company. If it's in between 3 billion to 10 billion, that's a mid cap company. If it's below 3 billion, that's a small cap company. A large cap company is more conservative. A mid cap company is moderate risk. A small cap company is high risk. But also with a small cap company, it has a high chance of making more money in the future, right? Because I always love to use this example. If you tune into the show, you hear me say this all the time. I'm 35 years old and I have a 9-year-old son. If you look at us physical wise, who has in the next 10 years, who's going to grow more physically? Who has the better potential to grow more? I'm probably not going to grow more. I'm probably going to grow less and less, right? I'm probably going to grow width wise. He's probably going to grow vertical wise. But you guys get what I'm saying. You guys and girls get what I'm saying is that the market cap tells you how big the company is. So by looking at the finances, is it a big company, a small company? How does it look compared to its competitors? Does it have a lot of cash, a little bit of cash? Is it profitable? Does it have a positive income, net income? Does it have a negative net income? What is the trend? Is it making more and more and more money, or is it losing more and more money, right? So that itself brings in risk. That's what's financially strong. What is a financially strong company? A financially strong company is a company that is making more and more money. Looking at that top line revenue, it is making more and more revenue every year. And not only is it making money, it's keeping more money. I want to see the net income growing as well. And when I look at the competition in its sector, I want it to be making more money. It don't have to be the exact dollar amount. Please break this down to percentage. But it's not about how much money you make, how much money you keep. So when you look at that top line revenue, boom, total revenue is $1 million. Now look at the bottom line, which is going to be the net income. Okay, they made $1 million, but after they paid all their bills, they're left with a negative 50 million. That's not too good. Versus if their competition is making only $500,000, but after they pay all their bills, they have $250,000 left over. Guess what happens? That is what does that mean? Okay, well, this company, yes, is making twice as much. Company A is making $1 million, twice as much as the other company. But once you look at the bottom line, company A is in the negative, but company B is in the positive. So now you can see where it's not about, oh, this person has more money. You're looking at, you can break that down into a percentage. Now you can say, well, this company, it keeps 50% of its gross profits versus company A, it keeps a negative something of its gross profits, right? So you can break it down into percentage. So just don't get caught up with, oh, this company got more money. You have to look at, okay, when the money is said and done, how much money are they keeping, right? So this is very important because this can tell you the management of the company. Now, when you look at the cash flow statement, this can tell you how is the company funding its growth. Look at the investors' activity of the cash flow statement, right? Are they selling debt? Are they making investments? What are they doing, right? So this is finances. Looking at the finances, it's just like when companies look at your credit score. They look at your credit score. Who's the person that have a high credit score? This is a person that has a high credit score for whatever the case may be. They pay their bills on time. They do a good job with paying their bills. They do a good job with keeping their credit low and all those things like that. So now we're going to get into, ladies and gentlemen, something that's even better. We already talked about what is momentum strong. We already talked about what financial strong. Now we're going to take a 1-minute break. And after that break, we're going to give an example. We're going to give 2 examples of momentum strong companies. And we're going to give 2 examples of financial strong companies. And we're going to compare them. So you guys and girls, stay tuned. Don't touch that dial. Don't take a nap. Don't yarn or anything. But we're going to take a break and we'll be right back. Ladies and gentlemen, we're back here on the Prince of Investment, coming to you guys and girls live from the beautiful state of Denver, Colorado, via the beautiful state of Honolulu, Hawaii. Ladies and gentlemen, if you haven't done so already, make sure you hit that like, subscribe, and comment and share button. And always, I don't have a lot of time, and I know you guys and girls don't have a lot of time, so we're going to jump straight into it. So initially, we spoke about, before the break, we went over momentum strong companies versus financial strong companies. We talked about what does momentum strong mean? We also talked about what was financially strong mean. Now, what we're going to talk about, we're going to give two examples of momentum strong company, and we're going to talk about strong financial companies, and we're going to talk about the risk and the finances of investing. What does it mean to an investor looking at a momentum strong company and a financially strong company? So, ladies and gentlemen, let's jump straight into it. A very momentum strong company, I'm pretty sure you heard the name. Stock symbol SHOP, shop. Shopify. Who's heard of Shopify? A lot of people have heard of Shopify. Shopify stock from January all the way into this recording of September, Shopify stock, even with the pullback, has gone up 138% in 9 months. Very impressive, right? Shopify has gone up 138% in 9 months. Now, the thing about it is, versus Shopify is pretty much like an online company where it allows you to buy things, right? So Shopify itself has caught a lot of strong momentum. They've had a lot of momentum, 130 on the bullish side. They've gone up 138% within the last 9 months, right? Very strong momentarily. You can look at it on the graph. You'll just see it go directly up in a bull market. So many people call me about it and say, Prince, look at Shopify. What about Shopify? What do you think about Shopify? A lot of momentum. Now we're going to look at financials, right? Here's a financial strong company. Its competitor, Amazon. You all have heard of Amazon. Stock symbol AMZN. That's Alpha, Mike, Zebra, November. It has gone up 71% this year. 71%. Now look at Amazon. Amazon has gone up 71%, which is great so far this year. But look at its competition. Shopify has gone up 138%. So Shopify has almost doubled the value stock appreciation wise within a year. Shopify has doubled its value. Amazon has not doubled its value. So now it makes you think, why is Shopify going up so fast versus Amazon, who's kind of not lagging, but it's doing okay, but not great? Everybody knows Amazon is the bigger brand. Everybody knows Amazon is a big company. Amazon has gone up 71%. So now let's look at Amazon. Amazon, to me, is a very financially strong company. Let's start off with the first thing, Amazon's net income for 2019, they reported a net income of $11.5 billion. $11.5 billion in net income in 2019. Also, let's look at how much cash Amazon has on hand. Amazon has $55 billion in cash on hand. When you look at Amazon's total assets, $225 billion on total assets. So Amazon, it is a very big juggernaut. You're talking about 55 billion in cash, meaning that any downturn in the market, they probably can withstand, right? They probably can make it through the other side. I've already told people already, Amazon is poised to have an amazing fourth quarter 2020. As we are in the middle of a pandemic, when you look at more people are spending more time at home, more people are working from home, and more people are shopping from home. Who's the number one e-commerce person? And the strongest quarter for Amazon is always the fourth quarter as we roll into the holiday season. So this holiday season, do you think people are going to be outside for Black Friday trying to get those sales? Or do you think people are going to stay wrapped up warm in their blanket and shop on their couch on Cyber Monday? I think Cyber Monday is going to be amazing. I think it's going to crash a lot of sites. But holiday season, Amazon is poised to have a great fourth quarter. So even though it is financially strong with $55 billion last year reported and having in cash, $11.5 billion in net income last year, and a total assets of $225 billion. Now let's look at Shopify. Shopify stock this year has more than double its value at 138% up. Now let's take a look at this company. What is Shopify's net income? What is this cash? What is this total asset? Now I'll be honest with you, ladies and gentlemen, I have never used Shopify myself. I understand it a little bit, but I'm not very familiar with Shopify. But I understand it's a e-commerce site, right? You can build a site, sell things there. I kind of understand the basic gist of it. Not like I do with Amazon, which is a household name. Amazon is a large cap company, right? It's very well established, very well mature. Now let's take a look at Shopify. Shopify net income is at a negative 124 million that it reported in 2019. A negative 124 million. Let's look at the cash it has on hand. It has 2.6 billion in cash on hand in 2019. Also, its total assets are 3.5 billion. So you look at Shopify, it has a total assets of 3.5 billion versus Amazon 225 billion. Cash on hand for Shopify 2.6 billion versus Amazon 55 billion. Net income a negative 124 million versus Amazon 11.5 billion. Right? So even though we can look at this and say, wow, Amazon seems to have way more cash to be way more financially strong, but why is it underperforming Shopify? Shopify is an example of a stock that caught a lot of momentum. Now, when you look at this, the risk that's associated with momentum stocks, one day people wake up, Shopify is trading for about $1,000, Amazon is trading for about $3,000. So the thing about this, when you have the risk, people with strong momentum companies, they wake up one day and they look at the finances of the company and say, whoa, the finances doesn't look that great. And one day the bubble just pops. Momentum stocks are known for creating bubbles. Right? The momentum getting there, buyers, just like you see it in real estate. This is not only for stocks. This happens in real estate. This happens in business, all over the place. Investors get excited when they see things going up. When the bull is running and everything is going up, people love to buy. When the bull is down and stocks is trading down, people love to sell. For a prime example, it happens in real estate. Everybody else is selling their houses. They want to hurry up and sell their house before they lose their money, right? It's the same thing when people buy their house. When people get ready to buy a house, they see the prices going up and they're like, let me jump in. The fear of missing out catches the bull market. You say you was watching Shopify and you watched it double itself. You're kicking yourself saying, man, I knew I should have grabbed Shopify. So you jump in to catch some of the momentum. You got to be very careful and be able to pick out momentum strong stocks, because the person out there that's investing into Shopify, I say, well, if you look at the finances, why are you choosing it over Amazon? Maybe they know something that I don't know. But when you look at the finances, Amazon is way financially strong compared to Shopify. Now let's take another example. We're going to take another example. The next example we're going to use is Tesla and Apple. We're going to go through Tesla and Apple just like we did with Shopify and Amazon. So Tesla, it falls upon a strong momentum company when you compare it to Apple. Yes, I know Tesla is a electronic car maker, but Tesla is trading more like a technology stock than it is an automaker, right? So you look at Tesla. Tesla has caught a lot of momentum this year. We've heard Tesla has dominated the news. Tesla so far this year has went up 141% in the last 9 months, 141%. Tesla has caught a lot of momentum. Now let's look at Tesla's finances from 2019. The net income in 2019 that Tesla reported was a negative 866 million. Tesla is profitable. So a negative 126 million for Tesla net income in 2019. I don't know what I'm not saying 2020 because the year's not over yet. So I have to go off the latest report. Last year, they reported a negative $166 million. The cash on hand Tesla reported was 6.2 billion. All right. I know they had to grow so far this year because the stock just went up. So the company has made a lot of money. Now you look at the total assets of Tesla. The total assets of Tesla is 34 billion, right? Total assets, 34 billion. Cash, 6.2 million. Net income, a negative 0.866 million. Now let's take a look at Apple. The next one is Apple, right? Look at the company of Apple. Apple has gone up 52% this year. Not anything compared to Tesla, which went up 141% this year. Apple, when you look at the concept of Apple stock, Apple has gone up 52% this year. It has a net income in 2019 of 55 billion. It has cash on hand of 100 billion, and it also has total assets of 365 billion. The first company to hit $2 trillion in value before, after the split, they had a pullback here. But Apple has stronger finances than Tesla in 2019. Now, when you look at this, Apple has only gone up 52%, but Tesla has gone up 141%. We all know within the last year, Tesla has caught an immense amount of momentum. Tesla has took off running to the moon, right? That's a strong momentum. Apple has way better finances compared to Tesla. So why is Tesla doubling its value when Apple is only going up 50%, which is not bad either? Tesla is a strong momentum company. Apple is strong financially. So the risks that are associated with Tesla versus Apple, momentum can go, stocks can trade off high, but it also will always come back down to its true value. So in this episode, momentum stocks will always return to their true value of their finances. They will always reflect their finances. So when you see a company take off to the moon, you have to look at their finances and be aware of, hey, I'm in a momentum strong stock versus I'm in a financial strong stock. I'm glad in this episode we talked about what is momentum strong versus financial strong. We also talked about the risk that's associated with it. We also looked into we used some examples, and we looked into the risk and the finances that are associated with it and the characteristics of a momentum strong and a financial strong stock. Ladies and gentlemen, that's going to conclude today's episode. I hope you guys and girls really enjoyed it and liked it. If you did, hit the like and subscribe, share button. Check us out here on ThinkTech Hawaii. And always, until the next video, podcast, cartoon, or whatever else crazy you see me around the globe. My name is Prince Dykes. I'm the Prince of Investing. Until the next video, podcast, or cartoon, or whatever else crazy you see me to around the globe. Peace, be safe. I'm out, and thank you.